NVIDIA is continuing to show significant weakness. No real news. Obviously, that has been the case largely since earnings, despite the fact that those earnings, by many accounts, were considered to be quite good. You continue to have this overall concern, I suppose it is, certainly in the out years. Let's call it not 26, but on from there, Carl, that there is going to be some sort of diminution in demand over time, or perhaps even during the course of this year, CapEx budgets have nowhere to go at this point, given the huge commitments, but down, and what that could mean. But you see NVIDIA and the continued weakness.
Yeah, we're lucky that we're going to get quite a few catalysts regarding NVIDIA in the coming weeks. They present, I think, a couple of times this week at a Cowen healthcare conference and then the Morgan Stanley TMT conference, in addition to Jensen's keynote in the coming weeks. But overall, the weakness in anything semi-related is notable today. Broadcom, AMAT, TLAC, and certainly NVIDIA, the biggest laggard on the NDX.
Yeah, other than Intel, which we pointed out is up for a different reason. Yeah, and which leads us quickly here to NVIDIA, which is down almost 5% again. What do you attribute its recent weakness to, Ben?
Well, there was a lot of noise over the weekend about CoWos, which is their packaging technology for the new Blackwell, being cut by NVIDIA. I actually think it's noise. I actually think that they're continuing to make progress there that may actually even help margins by the second half. But the noise over the weekend was a fever pitch, and that could be impacting the stock. There's also just a broader sell-off in semis and a negative halo over it due to the administration, worries over bans of chips, worries over more tariffs, worries over China retaliating, worries over the AI diffusion rule that Biden put into place being kept. And that rule bothers me probably the most of all of them. And so until all those are lifted, semi is going to be tough. The AI semi is going to be tough. But hopefully President Trump, sees that we need the stock market to work, and we need to be a leader in AI semis and get this going again.
Yeah, we'll see.
But obviously, one of the reasons for the weakness in the market at the index level, specifically, is NVIDIA, which is down again. Take a look at NVIDIA today.
Yeah.
It can't get any footing from earnings. It's been down about 5% today. It's off more than 11% year to date. It is the big issue, along with momentum. You're out of it completely now.
I am out.
When did you sell the rest of it?
I sold the rest of it when they reported earnings. So it's I didn't get it on the other swing in the earnings because it went into the green. I sold it when it started to go into the red. Look, there are a few issues with NVIDIA in my view. One of them being that with Apple, for example, you're starting to see them make their own chip, and others all have plans to. It's got competition. Also, it's been reported that China is buying the NVIDIA chip through other countries. So I think that's an issue for them. And then finally, when you take a look at what tariffs could do, and Taiwan Semi has been called out for tariffs, that stock's really gotten hit. It's not reflected here, but they'll pick up the excess capacity.
Well, they're about to announce, we think, according to the Wall Street Journal, a $100 billion investment in the U.S., something you may hear more about as the afternoon progresses.
Right, most of which, frankly, has been announced already. But the point on NVIDIA is that a lot of people didn't even know why they owned it. They owned it for the momentum. And they owned it because they didn't want to sell it because of taxes. And I think part of the hit to technology overall is that those that came into the year saying, okay, I'm going to wait to sell until the next year, 25, and hopefully pay lower taxes or just delay my taxes for a period. They said, you know what, I can't hold on anymore. So it's a combination of factors that hit that in tech. But it's really notable that the only 2 of the 12 sectors that are down year to date in the S&P are information technology, which is tech, and consumer discretionary.
Which is obviously heavy weighting towards Tesla and Amazon.
Exactly. And I actually am still negative on the market, not bearish, but still negative, and looking to raise cash. That's one of the other reasons I sold NVIDIA.
All right, shareholder snipe. What about Weiss saying, you know what, you got all these cross currents now in the name, hasn't traded well since earnings. Right. The only time it's really traded, quote unquote, well, was pretty recently into the print, 5 days or so into the print. That's it.
Yeah,
that's it.
Yeah. And guess what? The print was obviously solid. It was up 70%. Sales were up 70%. Earnings were up 70% year over year. $35 billion in revenue on the data center which is up 93% year over year. We were expecting $42 billion for the guide. They guided to 43. But to Weiss's point, I think export controls are obviously a concern. There is some third-party selling via China, where folks are buying their GPU chips. There is absolutely continued demand, but I think, it's obviously decelerating. We can't see 100% year-over-year growth in these metrics quarter after quarter and year after year. So I think that's what a little bit of the digestion is.
And Jason said this, and I keep emphasizing this over the last several weeks, but it's the deceleration in revenue growth. And that's, in fact, exactly what it is. NVIDIA's 79% revenue growth. Okay, 1 year ago, we're talking about 265% revenue growth. And you look out into the future, 4 quarters from now, you're talking about probably 40 to 50% revenue growth. So you're not going to pay the exorbitant premium that you did in 23 and 24 for that slowdown in growth, and you're seeing some of that slowdown in growth in other areas of the Magnificent Seven. I candidly think where NVIDIA is right now, and unfortunately, to a certain extent, it's been gamified, and we've talked about that on the show. These zero-dated options, the intense activity that's going on in the option market that drives it on a particular day. But I really think that NVIDIA might just be in a prolonged consolidation phase, and I think the viewers and investors overall are very unfamiliar with that type of a setting. But if you go back through the course of history, it's not uncommon.
It's had drawdowns. Let's do an intraday of NVIDIA, if you guys don't mind. It's down almost 9%. So it's at the lows of the session.
Yeah.
And as we said, it just hasn't traded all that well of late. You did have the chip announcement at the White House a short time ago, where the president made the comment about the tariffs. Of course, he was welcoming an investment by Taiwan Semi. Christina Partsinevelos is following sort of everything in chips, whether it's NVIDIA, the continued slide in the other names, and then TSMC.
Yeah, so to your point, NVIDIA did reverse Friday's, 4% gains and then some. But the big concern right now is looming export controls you mentioned. And I bring this up because Singaporean authorities arrested 3 individuals for fraudulent misrepresentation of the destination of U.S.-made Dell and Supermicro servers. So this past week, and the reason why it's coming up now, is that Singapore's Minister for Home Affairs and Law questioned, quote, whether Malaysia was a final destination. And so that's suggesting possible re-exports to China. NVIDIA, of course, is not declined to comment to me. Singapore, though, unexpectedly became NVIDIA's second largest revenue source back in 2024. NVIDIA clarified that selling to Singapore accounts for 18% of total revenue in fiscal 2025, so that's about $24 billion, while shipping to Singapore represents less than 2%, so about $500 million or so. So there's a big discrepancy between both. And in NVIDIA's most recent annual report with the SEC, they said, quote, customers use Singapore to centralize invoicing while our products are almost always shipped elsewhere. So they're trying to tell you that Singapore is not used as a backdoor for China. However, analysts at Mizuho warned today a potential ban on NVIDIA chips, specifically the H20s, to China could remove roughly $4 to $5 billion in revenue for fiscal 2026. So there is that overhang for the stock, because in a world where computational power equals geopolitical advantage, and I'm calling it the silicon smugglers game, continues with implications far beyond corporate earnings. And to your point about TSMC, just one last word about their investment. The tariffs will certainly add to TSMC's construction costs, especially after TSMC had already previously, this is going back over a year, acknowledged that U.S. manufacturing in Arizona will cost more to operate than Taiwan. We know that. And back in December, Macquarie Bank estimated at least 30% more. And that's not including these looming tariffs coming. So it's certainly going to be more, and TSMC is very unlikely to absorb those costs. That means the customers have to do so.
All right, that's a good understanding of all of these issues which are at play. Christina, thank you. That's Christina Partsinevelos. Let's now bring in Capital Area Planning Group's Malcolm Etheridge and Requisite Capital's Bryn Talkington. Both are CNBC contributors. Dan Greenhouse, of course, of Solus is still with us. Bryn, I'll go to you first. I mean, are you surprised that NVIDIA has continued to trade so poorly?
On the surface, yes, right? So if you look at it fundamentally, they just reported Q3 2025, right? So they have a different year. So if you just look at the estimates for 2027, the stock's trading around 22 times 2027 numbers. And that's where you have to say the market is saying we don't believe that's going to happen. And you have to respect the market. And I think to Christina's point, if we get $4 to $5 billion of tariffs on our export restrictions on these chips, well, there you go. That they're not going to make that 2027 number. And so right now the stock is still trading in this channel between 110 to 115 to 145-ish. So that channel has not been violated. We want to see that hold. But I think that you do need to respect the market of saying, well, you can say what you want about their numbers in the future. We don't believe those are going to happen. And at the same time, you're just seeing so much carnage in like an AMD, which I think is down 55% over the last year. And so this market has not suffered fools, but I don't think this is the time for you just to ignore what the market's saying. I continue to sell calls on the name. I really like the name long term, but I respect how it's trading right now. I do want to see it bounce off this, like right around this level. You want to see it bounce and not violate that $100.
And it's kind of interesting because we have export restrictions on quite a few countries, but apparently not Singapore.
Yeah, and I was just there on Friday, right? So I could tell you the sense is that these export controls, it's not going to be really constrained to ultimately Singapore. And I think the fear here, and I think you're seeing on the NVIDIA sell-off, is that this is going to be a huge ripple effect. It's going to be harder and harder to get those chips. That's something, even though there's the China piece, it could have a much broader impact across the region. I think bark's worse than the bite. I mean, as someone in Asia for 2 weeks, I think it's when I get the fears, but I don't think this is something that's really going to be as much of a restrictive factor, despite everything we saw today.
Do you think it's deep-seek concerns that are spurring this next wave potentially of regulation? And I guess perhaps just as importantly, has the train already left the station when you look at homegrown chip development in a place like China?
Look, I think DeepSeek, that was a shot across the bow because I think everyone recognized, okay, they didn't do this in the basement with no chips. And it comes down to if they use next-gen NVIDIA chips, what does that mean? And I think, look, the broader fear, especially that you see in the Trump administration, is, okay, we got restricted more and more. So I think what you're starting to see from an investor perspective is, okay, what does this mean for NVIDIA? Second derivatives. Is this going to crimp the supply chain? Now, we disagree. I think when it comes to tariffs, we've seen many times, this is one, it's going to have an impact, but I do not believe it's going to have such a pronounced impact. I think it's being factored in here in terms of supply chain. Still, 15-to-1 demand to supply, when it comes to Blackwell.
Well, okay, bark is worse than bite. But still, a bark can be pretty bad if it hurts sentiment, right? If it sort of puts a wet blanket on the party, has an impact on valuation. At what point does it start to do that? And do you have to, if you're an AI investor or even NVIDIA investor, have to get less bullish?
Yeah, look, I mean, no doubt you're going through a lot of turbulence here. From a sentiment perspective, you're seeing the stock. Then it becomes self-fulfilling prophecy. But what I'll tell you is it comes down to just demand. Do we see any changes in spending? That demand's going to continue to be there. And I think it's when there's only one chip in the world that ultimately could fuel this. I get we're going to go through this, but in my opinion, these are opportunities, not the time to run for the hills. I think when you look at it in terms of tech winners, if you look over the years, it's period like this in these white knuckle periods that you own the winners, you own the NVIDIAs.
All right, I hope you're all doing well today and staying calm in this market. The S&P finished the day about 1.8% lower, and NVIDIA had a rough day, finishing about 8.7% lower. First, let's mention what's going on in the broader market, and then I want to talk about NVIDIA. The market sold off heavily today because the 25% tariffs on both Canada and Mexico, as well as a 10% tariff on China, are scheduled to go into effect tomorrow, and this time it appears that the administration is serious about these tariffs going into effect based on comments from both White House and trade officials today. Markets are not happy about this in the short term. Now, when it comes to NVIDIA, we have a few important topics to talk about. First, I want to address the CoWos situation. Second, I want to talk about the Singapore situation. Thirdly, I want to talk about the news about TSMC today. And finally, I want to talk about something I think market participants are missing when it comes to NVIDIA. All right, so the CoWos situation that Ben mentioned in the second clip of this video is not anything to be concerned about. There was some worry over the weekend that NVIDIA was reducing CoWos capacity when that is actually the exact opposite of what's happening. Let me play this short clip for you of Jensen Huang talking about this very topic less than 2 months ago.
The first question has to do with CoWos L and CoWos S. Blackwell is based on CoWos L. Two very large dies are connected using CoWos into a very large chip. As we move into Blackwell, we will use largely CoWos L. Of course, we're still manufacturing Hopper, and Hopper will use CoWos S. we will also transition the CoWoS S capacity to CoWoS L. And so increasingly we'll transition to CoWoS L. So it's not about reducing capacity, it's actually increasing capacity into CoWoS L.
Capacity is actually increasing as NVIDIA transitions capacity from CoWoS S for Hopper to CoWoS L for Blackwell. And so the whole CoWoS situation is nothing to be worried about. Now let's talk about the second issue, the arrests in Singapore. This is a very strange situation, and we don't have all of the details right now, but I'll do my best to make sense of it all. Many people are worried that high-end NVIDIA chips are being smuggled into China via Singapore. According to CNBC, Singapore accounted for 18% of NVIDIA's revenue in fiscal year 2025 based on customer billing location, but accounted for less than 2% of revenue based on products shipped to the country. This has raised some eyebrows and caused some people to worry that this situation may result in tougher export controls on NVIDIA chips. The article from CNBC acknowledges that NVIDIA said, quote, "Customers use Singapore to centralize invoicing, while our products are almost always shipped elsewhere." That could be part of the reason for the disparity between the percentage of revenue based on customer billing location versus the percentage of revenue based on product shipping location. Now, even if that is the case, it would appear that there may still be some sort of secret network reselling servers based on the recent arrests in Singapore. And so that is weighing on NVIDIA stock due to fears of potential tougher export controls in light of this news. All right, now let's cover the third topic I mentioned, the U.S. investments that TSMC announced today. This is very relevant to NVIDIA because TSMC is the company that manufactures NVIDIA's chips. TSMC announced today that they plan to invest at least $100 billion in the U.S. in new investments over the next 4 years to build manufacturing plants in the U.S. This is positive news for NVIDIA and the semiconductor industry as a whole, as it signals that TSMC is working to increase manufacturing capacity in the U.S. Right now, more than 90% of the world's most advanced chips are being manufactured in Taiwan. And so this investment from TSMC is a big step in reducing risk for the entire industry in case there was ever to be a conflict over Taiwan in the Pacific. All right, so that's the current situation on NVIDIA today. Now, I want to mention some things that I think are very important when it comes to NVIDIA, because I think the market is missing something. First, if we use NVIDIA's closing price today of $114.06 and we calculate NVIDIA's PE ratio, NVIDIA, as of today's closing price, was trading at roughly 38.8 times current earnings. To put that into context, Apple is currently trading at about 37.8 times current earnings, and Amazon is currently trading at about 37.1 times current earnings. But here's the thing, NVIDIA is expected to grow at a substantially greater rate than both Apple and Amazon over the next 2 years. And so I think the selling we've seen in NVIDIA recently is getting to the point where it doesn't make any sense. NVIDIA is expected to have gross margins of 71% in the current quarter, with margins expected to rise to the mid-70s later this year. NVIDIA is just starting to ramp production of their new Blackwell system, which will be their most profitable product to date. According to Jensen Huang in his recent interview with CNBC, the token generation rate for reasoning models using Blackwell is 25 times that of models using Hopper, which means 25 times more revenues from AI factories that use Blackwell compared to AI factories that use Hopper. So of course companies are going to continue purchasing NVIDIA's latest products when they deliver performance increases like this. That means demand isn't slowing down anytime soon. Jensen also mentioned on the earnings call that the transition from Blackwell to Blackwell Ultra will be much easier than the transition from Hopper to Blackwell. That's another positive. Plus, we have GTC this month, where Jensen will unveil the next clip of product after Rubin. And for those who don't know, Rubin is the next generation of product after Blackwell. I could keep going, but essentially what I'm getting at is that NVIDIA is trading at a current PE on par with that of Apple and Amazon. But NVIDIA's expected growth over the next 1 to 2 years is substantially greater than that of both Apple and Amazon. I think this is setting up for a situation where fundamental investors look at these stocks and think to themselves, wait a second, why would I buy Apple or Amazon when I could buy another Mag 7 stock with significantly greater growth expected over the next couple years? I'll be honest, the recent price action in NVIDIA stock has been frustrating, but the long-term thesis and fundamentals of NVIDIA remain in place, and they are even stronger after this recent earnings report. I think the recent price action we've seen in NVIDIA is temporary. Now, I don't know when it ends or where the bottom is, but I just look at this company purely based on fundamentals, and I think to myself, it's only a matter of time before market participants realize two things. NVIDIA is really not that overvalued here when you consider the company's expected growth, and secondly, 2026 is likely going to be another growth year for NVIDIA. Maybe that will become more apparent to the market after Jensen reveals new products at GTC on March 18th and explains the performance improvements of said products. I don't know. But regardless of that, I think we're in a situation where a lot of fast money is flowing out of NVIDIA after earnings as some traders come to grips with a slowing revenue growth rate. At the same time, at some point, I seriously do think that funds from fundamental investors will flow back into the stock once they realize that NVIDIA is compellingly valued and that 2026 is very likely to be yet another growth year for the company. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.